On an intraday basis, we have managed to cross the 25,000 level, which is one of the key psychological resistance that Nifty has seen. Now, sustaining above that level is something that Nifty has to do, and then analysts, at least technical analysts, believe that there is strong upside from the current levels. Now, the next index has been gaining for the last 6th consecutive session, and let's look at the factors that have led to this massive rally in the Nifty in the last few sessions. Now, why this rally? Firstly is the India-US tariff negotiations which have restarted. Now, currently, US has imposed 50% tariffs on India, but recent dialogues between the US President and India's Prime Minister suggest that negotiations have restarted. So, that is one of the major reasons why we are seeing the rally in market, at least today. The second factor is the GST rate cut, which is expected to boost consumption. Now, major FMCG items have seen a GST rate cut of from 18 to 12% to 5%, and cars have seen a cut of 28 to 18%, while footwears, apparels and ACs have also seen a major cut when it comes to GST rate, and these factors are also expected to lead to a strong festive season. Apart from GST rate cut, it is the income tax cut that we have seen, the interest rate cut that we have seen, and the 8th pay commission that has been implemented are the major reasons why the festive season, which is just around the corner, is expected to see a major bump up in terms of sale, and this will be reflective in the third quarter of FY26. Apart from that, FI positioning continues to remain weak in the US market, so the downside for FI selling is very less. In fact, yesterday we saw an FI buy figure coming in, that is the first buy number that we have seen at least since August 2021. Even in the FNO side, if you look at the FI long short ratio, that is at around 8:92, which means that only 8% of the FIs are long on India, and this is one of the lowest number that we have seen in many years. So the downside of the chances of FI selling more is quite less from the current levels. Apart from that, growth expectations have normalized. Earlier we had seen a sharp cut down in the earnings growth by analysts. Now that has also slowed down, and growth expectations are very much normalized for Nifty 50 and for India earnings going forward. So that is also one of the reason why we are seeing this kind of a rally when it comes to the benchmark. And last, the reason is valuations are now relatively cheap. Obviously, India's valuations are expensive when compared to other emerging markets, but it has their own reasons. But compared to its historical valuations, it is relatively cheaper. The 12-month forward P just stands at around 20 times, while in past we have seen this go up to 22, 23 times. So valuations are also now relatively cheaper when it comes to the benchmark.